I'm joined by Irwin Simon. He's actually the chief executive of Hain Celestial, which is one of the largest organic natural foods producers. In fact, the largest supplier of packaged goods to Whole Foods, among other grocery stores as well. Irwin, thanks so much for coming in.
Thank you very much.
So as Lisa said, we've been talking so much lately about rising food costs. Wheat costs have been surging. Corn costs have been surging. And we've gotten a lot of different reactions from different companies. Some of them, like Whole Foods, are succeeding in passing them on to customers. Kraft says it's not going to be able to recoup all of those costs. What's going on with you guys?
You know, first of all, it is concerning where commodity costs have gone, and I think, you know, as come back, and my big thing is, how do we ensure we feed consumers healthy food at affordable costs? Because, you know, what happened, you know, during 2008, 2009, we really saw consumers exit natural organic foods, run to private label, run to conventional foods.
Because they were priced at a premium.
Because they were priced at a premium. But it's interesting, you know, we just reported earnings. Our sales are up 21%, organic growth up 12%, Whole Foods, you know, their comps run a double digit. So it showed you how the consumer went to conventional foods and has come back to eating healthy, and healthy is not a fad, not a trend, it's here to stay.
So what's going to happen now? Are you going to be able to hold those prices at those levels?
So Julie, from my standpoint, what's important for us? How do we make sure we do that? And you know, this year we've been very lucky. We've been hedged and we bought out and we've been protected, you know, on last year's crop prices and stuff like that. But, you know, as hedges come off and as we have to start buying new crops, there's a lot of costs out there. Right now, diesel prices are $1 more expensive than they were last year when we did our budgeting. So from a company our size, hey, we've taken a lot of productivity and it went through a lot of productivity, taken a lot of costs out of the business, but there's only so much you can take out. On the other hand, listen, we've taken a 2.5% price increase already, and we're out there right now looking at taking another 2.5% price increase. But again, you know, I'm not sure why commodities are going up the way they are. You know, we talk about world demand, we talk about third world countries wanting more and more. I'm not sure if there's, you know, a lot of manipulation going on with buying commodities. And speculation, not manipulation.
But regardless, you have to deal with it.
You have to deal with it, and it becomes, you know, really a tough part of the business today because I'm concerned with pricing. And I've always said this here in Natural Organic Foods. Our products should be 10 to 15% more than conventional products. And with the growth and with the demand, and actually, you know, there was a study that came out last week that said more and more consumers are eating at home. So with that, it's cheaper, much cheaper to eat at home than it is to go out to restaurants and stuff like that. So it's not costing you more even with prices going up.
So the 2.5% increase and then the other 2.5% increase, obviously your customers have accepted these increases. Have you seen any kind of pullback at all?
Not at all. And again, you know, listen, I think where it comes back to natural and organic, and it comes back to antibiotic-free chicken, it comes back to, you know, our Greek yogurts, our Terra chips, where we've seen 35% surge in sales. A consumer feels, yes, we'll pay more, but I'm getting great value. Where there is a commodity item or a private label item to compare it to, I think that's where a consumer seems to, you know, not want to pay more. But again, I take it upon us as a big responsibility, even though just because prices have gone up. The easiest thing is to pass on a price increase.
Right.
But what you don't want it to do is to affect your volume.
Now, I got to ask you about Carl Icahn.
We don't have a long enough in this interview.
He has about 16% stake in the company. He's the largest shareholder right now. Icahn, of course, he's known for putting pressure on some companies to put themselves up for sale or maybe split them up. Well, I mean, are you talking to him? What is he telling you to do? What's the influence here?
You know, listen, Carl and his group bought stock when the stock was at $18, $19, and hey, he is smart. He, you know, picked a great winner. With the way I look at it is, you know, he's a smart investor. He's a smart stock picker. He really recognizes companies. The best thing for us to do is perform, grow the company. We're in a great space. We're in a great category. Eating healthy, not a fad, not a trend. And we own some of the greatest brands, you know, in the world today in eating healthy categories. So,
just quickly, you open to a sale?
Listen, I am open to the right thing for shareholders, but in the meantime, we are in such early innings of growing Hain Celestial, and you know, I started this company from scratch. They were, you know, on the run rate of $1.5 billion in size. We've just did a good acquisition in Europe, in Norway. We're expanding in Asia with Hutchison Whampoa. We'll be in 100 cities with organic baby formula. You know, we're looking at moving into India, South America. So the expansion opportunities are tremendous.
All right, we got to leave it here. Thank you so much, Irwin Simon of Hain Celestial.